I'm Billy Billings, a relationship manager here at Southwest Georgia Farm Credit. Thanks for joining us today for part 2 of our webinar on growing your cash flow. If you're just starting your farm operation, this webinar, hosted by Gary Matteson of the Farm Credit Council, can help develop an annual business plan, create a 5-line income statement, and show you how to best demonstrate your annual business results. Saving money, protecting your credit rating, and gaining experience and networking are all key ingredients for a successful farm business. Email us at info@swgafarmcredit.com if you have any questions. Thanks again for watching.
Hi, my name's Gary Matteson. This is Growing Cash Flow Part 2, the second or the last in this series of webinars about understanding your business. I'm going to be talking today about an example of a vegetable business, a small-scale business that where the operator sells direct to retail using farm stand sales, farmers market sales, and even CSA, community supported agriculture sales. If this isn't the kind of business that you're intending to go into, don't think this isn't important, because the principles that I'll be talking about today are certainly the same for virtually any small business. In this case, I'll be talking about, I'll do a quick review of what we covered in the previous webinar, which really concentrated on the 5-line income statement. If you need to go back and see that webinar again, that's great, but I'm going to do just a quick review of the more complicated parts of that 5-line income statement, just to get you tuned up for today's follow-on presentation. So what we've got here is in the bottom left-hand corner is a historical data, the sales from last year. These are the figures based on last year's sales for Tyler's Tip Top Tomatoes. This is a business that is described as a benchmark business because it's really aggregated from many other similar businesses to be able to come up with a 5-line income statement with financial information that is an average of several other businesses. So as we look at just a 5-line income statement, this again is an equation. You can see on the left-hand side, sales minus cost of goods sold equals gross margin minus overhead equals net profit. Again, these are the dollar amounts are less important really than expressing the way that this business performs in terms of percentage of sales. Because if you describe your business in terms of percentage of sales, then that allows you to compare it to any other business of any size. And in this case, what's important for you as a beginning farmer is to understand this 5-line income statement is really the simplest way to express how your business works. Where does the money come from, and what do you spend it on? So let's do a quick review again of this 5-line income statement. Sales, of course, is everything that you sell. The cost of goods sold are those things like seed or fertilizer or hired labor that you spend to produce the product that you're going to sell. It's a math problem. Sales minus cost of goods sold is gross margin. You can see that in dollars, gross margin is $54,000 and change, but as a percent, it's 40%. 100% minus 60% equals 40%. That gross margin is your number of how good you are at doing the thing you do, producing that crop and selling it. Another way to look at this in terms of percent is if I gave you 60 cents worth of cost of goods sold, the seeds, the fertilizer, the hired labor, the tractor fuel, all those things, if I gave you 60 cents, you could turn it into $1 worth of sales. That's how good you are. That means your gross margin is 40%. With a gross margin of 40%, you have that $54,000 in this particular example to decide what you're going to do with it. There are only 2 things you can do with gross margin. You can spend it on overhead, which are those costs that whether you grow 1 tomato or whether you grow 10 tons of tomatoes, you have to You have to have that cost, such as rent for the land or insurance or taxes. That's what constitutes an overhead cost. And included in this $40,000 or 30% of your sales is $30,000 to pay for you, to pay for your being the farm manager of this small business. It's important to include you as an expense because you're you're going to be putting in your time, and you should plan, you should budget for paying yourself money. The net profit that's left over, the 10% net profit, is really not, you shouldn't think of it as leftover money. You should think of it as what you plan to be able to invest in your business or invest in yourself at the end of the year. Net profit can be spent on, anything you want. Beer and pizza. It can be spent on expanding your business. It can be spent on buying a new piece of equipment. That's up to you to decide what to do with it. But if you don't plan to have net profit, you likely won't have any profit. And how I define net profit is the ability to do again next year whatever you want to do. If you have a net loss, that means that you're not going to be able to continue to do what you want to do. You've lost money. So planning for net profit is really quite important. Okay, so if I take this 5-line income statement that I've been talking about and put it onto a spreadsheet, you're going to see, and as I add detail to the spreadsheet, the 5-line income statement is going to remain shown in green lines. So if we look, if we expand that spreadsheet to show just the 5 lines, but show it over the course of the year, each month, January, February, March, and also add to it our monthly cash flow down at the bottom in yellow, which is essentially your checking account balance, then you've got a pretty good picture of how that business has money coming in and money going out over time. If we add even more detail and show the entire spreadsheet, this looks really complicated. I get that. This is kind of scary. But if you think about it, the 5 green lines are still there. Income, total income, minus cost of goods sold or variable costs equals gross margin, minus fixed costs or overhead equals net margin. So all we're doing is adding more detail to show how we got to those numbers. Now, as a small business person, you don't have to be an accountant. You don't have to fill this out yourself. You can hire somebody or find somebody as a friend or neighbor or employee to be able to record your expenses and put them into a budget like this. The important thing is that you understand how these numbers are derived, how they get there, and understand what it means as far as having a budget in front of you that you're going to try to hit those goals every month of the year. If you're just starting in business and you're not expecting to have $134,000 in sales like this example, you can start out by looking at the income part of this spreadsheet and deciding, for instance, how much you're going to sell at farmers markets in June, July, August, as this budget shows, and it may not be that same amount that you're going to sell. You put in what you think you'd be able to do, but as you're considering developing a budget, the place to start is on the income side, and then the expenses, of course, will all be lower if you have lower sales. Somebody that you can look to help you figure out how to fill out a cash flow budget like this would be certainly someone else who's already in this sort of business, your cooperative extension agent in your county, or even a loan officer. And as you consider developing a budget, you can download that exact cash flow budget from this farmbiztrainer.com website. And on the website, there are also budgets for pastured pork and grass-fed beef. So with that as a as a review of the previous webinar, let's look at how you are going to act in your business. No matter what that farm business is, what should you be thinking about as you approach your business? And one of the main things is to be able to produce some cash, to have some income within 6 months. The reason for this is that every new business always has that problem of how fast to be able to have some money coming in versus just spending money over and over going out. The idea of having a small scale vegetable business, one of the benefits of that as a startup business is you're going to plant seeds in the spring and you're going to start harvesting at the beginning of summer, just a couple of months later. So that's a really effective way to start a business, is one that you're developing a cash flow, some income fairly quickly, as opposed to, say, planting an orchard and having to wait years to pick your first crop. So the idea of producing some cash quickly is very important for a startup business. One of the things that not that you have to borrow money in order to go into a farm business, but as you think about what are the other parts of your life that you're going to have to be able to continue with as you start up a farm business, is you've got to pay your other bills. And many people don't consider the family living expenses that they have, paying your cell phone bill and your car insurance and your house insurance, all those things. All those expenses don't go away when you start a business. So as you budget for your business, you need to think about those other expenses that you're going to continue to have and figure out where the money is going to come from to pay for those other expenses. The record keeping that you have to do is really the most important record keeping is that which you are going to use to manage your business, right? That cash flow budget that I've been talking about is probably the single most important thing that you'll use to manage your business. But of course, you have to keep records for tax purposes. Records for tax purposes are going to look a little different. They're going to feel a little different. I encourage you to understand the difference between the records that you keep to manage your business, like planting times and particularly the cash flow of that business. Those records are going to be different than what you would be required to do for tax purposes. Whatever records you have, keeping them up to date so you can have up-to-date information allows you to change what you're doing, allows you to actually manage your business. If you wait until the end of the year to fill out your cash flow budget and you don't pay any attention to it over the course of the year, you're really not managing your business, it's managing you. The idea of a budget is that its value is that it creates expectations that you can, at the end of that month, you can know whether you have met expectations or whether you have failed to meet those expectations, and therefore you can change what you're doing. It's all about income, expenses, and cash flow, like any small business. I don't know what in particular your business will look like, and you have a vision of what your business is going to be, but I'm not sure that you know exactly what it's going to look like either. But that's the fun of being a small scale rural entrepreneur and starting a small business, is that you can look and see opportunities that others may not see, and find the things that people want to buy that you can effectively produce. As you think about starting that business, probably the most important thing to do is to save money. To be able to have money that you're going to invest in your business is really an essential feature that any lender is going to look for in order to go into that partnership called a farm loan with you. You have to put some money on the table to be able to borrow money to be able to start and operate your business. Protecting your credit rating is certainly important. Gaining experience is probably one of those things that is the hardest to do. You may want to go work for somebody else in a similar business and spend a season watching somebody else manage a business like the one you want to get into. And that becomes part of your network and helps you make better plans for your future. And even before you are operating a farm business, to get used to the idea of developing some financial statements, such as a balance sheet, is extremely important, because a balance sheet is essential for going to a lender and seeking to enter into that lending contract that is essentially a long-term partnership. A balance sheet describes your assets minus your liabilities, and that equals your net worth. And assets is a fancy way of saying what you own. Your liabilities are what you owe to somebody else, and your net worth hopefully is going to be positive in terms of assets minus liabilities. A very simple balance sheet is going to look something like this. For instance, what's in your checking account, what you have in inventory that's ready to sell, what your equipment is worth, the leasehold improvements. Maybe you put a well onto the property that you're renting. And then your liabilities would include any kind of debt that you have, a car payment, credit card debt, a loan for putting in that well, let's say, or buying a piece of equipment. And then again, assets minus liabilities equals net worth. Now, what I showed you was a very simple balance sheet. What you're probably going to get from a lender or see online is a much more complicated looking net worth statement that has all sorts of lines and things on here. Well, you don't necessarily have all of these things. Non-farm notes and contracts receivable. Oh my gosh, what the heck is that? Well, this kind of net worth statement or balance sheet statement is something that again, your extension agent or your loan officer will be able to help you go through this and record everything that you have for an asset and all of the money that you owe. Perhaps a more complicated thing to envision as you're starting out is a farm income statement. This is, especially if you're just starting, you don't have any experience of income and expenses. And again, the equation here is income minus expenses equals net income. Now, if you think about this, this looks a lot like the same formula that the 5-line income statement that I talked about earlier had in it. And that's true. If you can do that cash flow budget, coming up with an income statement is really just changing the format and showing the annual results of your business in greater detail in an income statement. Again, this is something that a lender will want to see for your business. Your explanation of how you're going to spend, how you're going to earn money in income, and how you're going to spend money to produce those things that you can sell. Again, a very simplified income statement would show where you sold your products, your vegetables in CSA shares or at farmers markets, and then your expenses. If you notice, these are the same numbers that you saw in that cash flow budget. So there's overlap between that 5-line income statement format and the income statement that you would be able to show to a lender of, well, here's what I think I'm going to do next year. One of the most important things that you can do before you start your farm business and as you operate your farm business is make sure that your credit rating is accurate and good. If you go to annualcreditreport.com, you can see what the three main credit reporting agencies have on file about you and your history of repayment. This credit score is part of your credit report, and it is really a measure of your character so that a lender can look at your credit score and say, okay, so if you have agreed to pay other people, have you done that? Because chances are, if you've taken on debt from somebody else and you've paid it back successfully, you're going to pay back the lender that you will choose to use for financing your farm business. Having a good credit score is especially important for beginning and startup farmers because it's something that your lender is going to look at carefully in order to determine if they want to be a partner with you in your farm business. So with that, there's another quick run at what you should be thinking about as you start up a farm business. Again, the most important financial tool that you can develop is a cash flow budget that shows where you're going to get your income, what your expenses will be, and what you are planning for a net profit. It's all about understanding and being able to explain what you expect to put into your business and what you expect to get out of your business. Good luck. If you have questions about the 5-line income statement, how to fill out those spreadsheets that you can download, you can see my email address on this slide. Shoot me an email. I'd love to help you out. And also look for local resources like extension agents or bookkeepers or your loan officer to help you understand how to develop a budget that is effective and one that is going to help you manage your farm business.